Silver Forecast, SF Desk Brief. Saturday, January 31st, 2026. Good morning. This is the Silver Forecast Desk Brief. Yesterday's silver move was violent, fast, and emotionally unsettling. That's why today's question is not simply what happened. It's what did not happen, and what that tells us about where we are in the process. What actually happened? Friday's move was not an orderly exit. It was a liquidity event, meaning too many sellers were forced to act at the same time, and buyers stepped back. Stops were triggered. Algorithmic selling accelerated. Human participation pulled back. For brief periods, price discovery disappeared. When that happens, markets can swing sharply up or down without resolving the underlying structure. What did not happen? Despite the magnitude of the move, the system did not do the three things required for a true reset. Physical premiums did not collapse. Inventories did not stabilize. Volatility did not calm. In Shanghai, silver continues to clear above Western benchmarks. On COMEX, inventories were hit, not rebuilt. Those are not the signs of resolution. In plain terms, the system absorbed pain, but it did not heal. Shanghai spot update, important nuance. One development worth addressing directly is Shanghai spot silver. Shanghai prices did pull back sharply from their peak. That move matters, but only in context. What matters more than the absolute price is the spread between Shanghai and Western prices. Even after the pullback, Shanghai silver is still clearing at levels well above recent Western pricing. Depending on where COMEX settles, the Shanghai premium is likely to remain considerable, not erased. That distinction is critical. Premiums collapse when physical buyers step away. That has not happened. Why this is not the same as resolution. Sharp price moves in Shanghai during periods of extreme volatility are not unusual. What would be unusual and meaningful is this sequence. Sustained premium compression, followed by inventory stabilization, followed by volatility cooling. That sequence has not appeared. Instead, we are seeing price volatility without structural relief. That tells us the system is still adjusting to pressure, not clearing it. Why the media narrative is surging now. This context helps explain the sudden wave of bearish headlines. When markets move violently but structure remains unresolved, fear fills the narrative gap. Calls for parabolic tops, deep collapses, and systemic failure tend to surface after volatility spikes, not after systems heal. That does not automatically make those warnings wrong. It does explain why they feel louder after a day like Friday. Media fear resets sentiment. It does not reset structure. Where Michael Oliver fits. Critical clarity. Michael Oliver's work has been widely referenced during this move, and clarity matters. Oliver remains bullish on silver over the long term. That view has not changed. What he has consistently warned about is this. Strong momentum phases often include sharp mid-move corrections. Those corrections clear leverage, not fundamentals. They tend to occur from higher prices, not lower ones. His guidance has remained specific. Hold and accumulate physical silver. Hold quality mining stocks. Exit leveraged positions. That is not a bearish call. It is risk management inside a bullish structure. Why this distinction matters. The real danger in moments like this is not volatility. It is misinterpretation. When investors confuse forced selling with structural failure, decisions get rushed, usually at the wrong time. That is why moments like this are dangerous. Not because of price, but because they invite emotional decisions that feel urgent but are often unnecessary. So far, physical demand has not turned price sensitive. Supply has not elastically responded. Exchange inventories have not rebuilt. Those are the conditions that would need to change for a true reset. They have not. What we are watching next. This weekend is not about predictions. It is about patience and observation, not reaction. If this move were truly resolved, the market will show it. Premiums will compress. Inventories will stabilize. Volatility will cool. If those do not occur, then this week's volatility should be understood as forced selling working its way through the system, not resolution. Monday is where confirmation begins. Closing. Strong structures do not prevent volatility. They explain why it becomes violent. This desk brief is not about reassurance or alarm. It is about preventing bad decisions made under stress. We will continue tracking the structure and update accordingly.